Okay, why does it matter? It is what Bitcoin is. It is what NASDAQ is. It is what is driving markets. In addition, there are two different scales here. Why? Because Bitcoin is exponential based on Metcalfe's law, which is a network adoption model. So over time, you get the outperformance of the network plus the debasement, which is why it's la la land in terms of performance. Bitcoin, Ethereum, all the big tokens. I use Bitcoin because it's easiest, it's got the longest track record to show people within. But Solana, Sui, you choose your thing. It's all based around the same thing. Why it matters, it has a 90% correlation. So 90% of the price action of Bitcoin is explained by this one macro factor, liquidity.
Raoul Pal thinks the digital asset revolution is about to enter its most significant stage. The next cryptocurrency bull market, according to the former Goldman Sachs executive, would be unlike any other because of the enormous capital inflows that pension funds, sovereign wealth funds, and other institutional players are expected to make. According to Raoul, the decline of fiat currencies globally will hasten the transition of cryptocurrency into a $10 trillion asset class. He continues to be adamantly optimistic about technology and digital assets, referring to them as the greatest investment opportunity of our time. We'll examine Raoul Pal's most recent portfolio report, his view for 2025, and his reasons for believing that this cycle will surpass all others in this video. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
No, sorry, we said leg one of the banana zone. I came back from Africa. If you remember, we did the drinks with Raoul, and I said this is the start of the banana zone. That was August. The banana zone phase one. We then said the liquidity was coming out and this would be the phase one correction. In April, we very publicly did a flash update and said banana zone phase two is starting. And we're still in banana zone phase two. In fact, banana zone phase two is going to be so big. This is Sui, right? So since the start of that, we're still up 670% on the start of that. So this is others excluding the top 10. We're still miles away from breaking out. And that's because you've got a bad asset allocation. This one, that did fine. Solana, Ethereum, Bitcoin, rock stars. It's all there. So Banana Zone phase two started here, and we're going to get into the acceleration zone of that comes ahead. We'll come into that. But you guys have got to learn patience. But no, you think, oh, no, I need that 100x. I've got to have the 100x. I'm never going to do this. And you actually, what you get is 100% loss, and everything else has gone up 20x. And you're poor. So let's not be poor. Here's total global liquidity. We're pretty much at all-time highs as liquidity is growing at 8% a year. That is the liquidity we think of because we're crypto people or technology investors. We think of this as great. For everybody else, including for your income, this is debasement of currency and it's totally screwing you over. Your cash savings, all of that, it's all based around this. If you're not beating this 8% annualized growth rate of global liquidity plus 3% inflation, that's 11%, your future self is getting poorer. This is the game we're in. This is why we're taking absurd, ridiculous, irresponsibly long risks in technology and crypto is to unfuck our futures. And I'm trying to help you do that and teach you how to do it. And then all you can reply is when banana. Okay, why does it matter? It is what Bitcoin is. It is what NASDAQ is. It is what is driving markets. In addition, there are two different scales here. Why? Because Bitcoin is exponential based on Metcalfe's law, which is a network adoption model. So over time, you get the outperformance of the network plus the debasement, which is why it's la la land in terms of performance. Bitcoin, Ethereum, all the big tokens. I use Bitcoin because it's easiest, it's got the longest track record to show people within. But Solana, Sui, you choose your thing. It's all based around the same thing. Why it matters, it has a 90% correlation. So 90% of the price action of Bitcoin is explained by this one macro factor, liquidity. Oh, and by the way, 96% of the NASDAQ. So what we have, and I keep trying to explain this to people, I'll explain to them tomorrow in more depth. We have a single macro variable that explains 90% of the price action of every major asset. That makes it the easiest macro risk-taking opportunity of all time because everything else is noise. Everything is just wiggles. You see the wiggles. These are wiggles. It's just noise. Wiggles. It's all noise. Because this is the trend. You just need to understand liquidity, and then you understand the directionality. And if you're caring about the next 3 weeks, the next day, the next month, you are doing this wrong.
According to Raoul Pal, cryptocurrency is expanding more quickly than any other investable asset in history. He projects that there will be more than 1 billion active cryptocurrency wallets globally by the end of 2025. According to Raoul, this adoption is happening at an unprecedented rate and is resulting in the greatest wealth growth in history. Every graph and piece of data he examines after decades of research leads to the same conclusion. Markets are driven by liquidity, and cryptocurrency has the potential to be the best performing asset class overall. Pal has been informing investors for months that the necessary components are currently coming together in a way that might cause the cryptocurrency market to see parabolic price swings. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Global liquidity, what's it doing? Well, global liquidity year on year is not at all-time high. So we're not at the acceleration phase. We've seen global liquidity increasing. It's just ticking down recently. Oh, guess what? The markets have ticked down a bit. Bizarrely, this was the banana zone phase one correction, start of phase two. Here's the 12-week lead. Since July 16th, 2025, we've seen this weird underperformance. And I was like, it's broken. It's broken. See, you are morons for following this. People start forgetting about it. We don't forget. You see, what has happened in the meantime is the Treasury General Account, that is the Fed, the Treasury, have been issuing bonds to top up their general account, which is taking cash out of the system. So they've withdrawn about 500 billion since July the 16th. That has hit risk assets somewhat. And of all the risk assets, the one that's most susceptible to liquidity is crypto. So crypto got that, which has been this choppy. It went up, alts have been outperforming, then they came back down again. And it's been just a bit sloppy. Nothing more than that. There's been nothing really adverse going on. Just a bit sloppy. Top of the range for ETH, top of the range for Sol. Tried to break out, came back down. Fine. But generally it's because they're sloppy because liquidity has been taken out very fast. The liquidity withdrawal stops about here. We're at the point where we don't need to withdraw any more liquidity and the Treasury General Account is topped up. Okay? So that negative thing has gone probably today, tomorrow, this week, next week, whatever. It's gone. And we start to see that liquidity will play catch up. Does it catch up to this chart? I don't know, but it always has done in the past. And I'll come on to the past in a sec. Okay. Then we go to the NASDAQ. It's actually done really well in recent times, following this beautifully, because 97% of NASDAQ's performance is explained by this. But look at this in the past. NASDAQ can do this too. This is all based on flows. So NASDAQ is getting consistent flows based on this technology bid that's going on. And it's sucking in capital from foreign investors, etc. And Bitcoin just has been sloppy because it's had less of the capital that was available. So it's the marginal capital. As the marginal capital comes back, Bitcoin outperforms. And I'll show you that. So here is the chart of Bitcoin versus NASDAQ since 2022. So Bitcoin's been outperforming NASDAQ. That's its job. That's what it does. This is why we own it. And it does these kind of nice corrective patterns up, corrective pattern up. And what we've done is we're back near this old 2 standard deviation favorite place of ours, where generally Bitcoin outperforms. Now, I've noticed many of you, and I noticed on X, are all like punting tech stocks and saying, well, crypto, it's boring. It's changed. The market's changed. They're all different now. It's not. Just short periods of time. So that happens. And what will happen is the more of you, I even heard from good hedge fund in crypto, they're like, yeah, we're thinking we're just going to trade more stocks now because, the crypto market's not the same. We've got the 9-13-9 pattern. So that starts to suggest that Bitcoin will outperform technology. Maybe technology corrects a bit. Bitcoin does okay. And then Bitcoin starts outperforming. And I would suggest that alts will outperform. Another interesting chart for you, not related to the liquidity flow, but located to when people start getting fixated on a particular type of market. S&P in the 90s into 2001 versus S&P today has been extraordinarily similar. And that's this technology narrative, the AI narrative, and how it's taken hold there. So just an interesting chart. Whether it holds forever, I actually doubt it. I think this probably comes up, then comes down. I think this whole cycle lasts a bit longer. So why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is.
In simple terms, Raoul Pal is stating that the recent erratic and careless volatility in cryptocurrency prices isn't an indication of weakness, but rather the result of rapidly depleting liquidity. The pressure on markets should lessen now that this liquidity outflow has ceased and the Treasury General account has been replenished. Liquidity is expected to recover from this point on, and historically, assets like Bitcoin and cryptocurrency begin to rise at that point. Raoul also answers the skepticism of certain investors who are labeling cryptocurrency boring and refocusing on IT companies. This sentiment, in his opinion, typically indicates that Bitcoin is about to outperform once more. He demonstrates, using historical trends, how closely interest rates in the larger business cycle affect Bitcoin's performance. At the moment, Wall Street gains from asset inflation while Main Street suffers from excessively high rates. However, rates will eventually need to decrease because debt needs to be refinanced. More than anything else, this will help cryptocurrency by opening the door to the next significant liquidity surge. Raoul concludes by explaining why it feels like this cycle is longer than normal. The market often follows a 4-year pattern that many refer to as the Bitcoin cycle, but in actuality, it is linked to the business cycle and debt refinance. Governments extended the debt's maturity from 4 to 5 years in 2021 to 2022, so extending the cycle by 1 year. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.